Taking a little bit of a breather after a drop yesterday as well. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Dani Berger. Bloomberg Open Interest starts right now.
Coming up, a disappointing outlook from chipmaker Broadcom revives fears that the AI rally may have gone too far.
Banking bonanza, JP Morgan, Goldman, Morgan Stanley, they are pulling out all of the stops, including an in-office rocket ahead of SpaceX's blockbuster IPO.
And a rare rebuke for President Trump. The Republican-led House votes to stop the war with Iran as peace talks falter.
So a few stocks on our mind this morning. I'm looking at Blackstone because about an hour ago we got the redemption numbers.
Because of course you are.
When am I not, I guess? I always am. But today I'm also showing it to you all. That's usually the difference. So about an hour ago, we got Blackstone redemption numbers, and they were higher than last quarter, and they were gating it this time. Last time around, you'll recall that they gave back all of their money. But a couple important things to note, Matt. It was 10% redemption request. Compared to Cliffwater, it was something like 17 for them. So much better than feared. So you're seeing the shares rally 1.6%. They emphasize we have ample liquidity. We're doing okay.
I also think it's just 10%, right?
Yeah.
And a lot of people just want to get out before somebody else.
And we've looked at all the numbers. For a lot of these funds, it's only a couple of investors that are the ones that are trying to redeem everything. So you had 10%, but maybe it's only a handful that are actually asking for their money back.
And they're going to plow that money back into a new vintage anyway. Broadcom's strong outlook isn't enough to impress investors despite being above estimates. This is, to me, the story of the day. This company had added $270 billion in market cap over the past 5 trading sessions. So it added an IBM, it added a Salesforce, and it says it's going to have 180% revenue growth for its AI chips. That's already pretty good, right? 180% growth. That's at least double the kind of growth that NVIDIA puts up. But it just wasn't enough for markets. And we see that, Dani, really across the spectrum. CrowdStrike, for example, beat estimates and raised its forecast, but still is falling today.
I mean, it's not just falling. It's down 15.33%. Let's talk about that with Bloomberg Equities reporter Carmen Reinecke. Carmen, what do you make of that? Because numbers are strong. Yeah, expectations are high, but 15, that's pretty brutal for a drop.
It is. And I think the thing that we're seeing really is that forward outlook just wasn't enough to really excite investors, especially after the stock saw such a huge run up. I mean, $270 billion in 5 days is incredible. And that was only the last 5 days. It was up through yesterday's close, more than 60% from a March 30th low. We've seen this extended rally in the semiconductor space overall. And so it makes sense that especially if expectations sort of fell short, investors might want to be taking some off the table. Especially, I've heard from a few sources that you might want to take some off the table with some huge upcoming IPOs.
That's exactly what I was going to ask you. If we're going to see a $2 trillion almost SpaceX IPO, if we're going to see a $1 trillion Anthropic IPO, OpenAI as well, that money for a lot of investors needs to come from somewhere else, right? And we see it for sure coming out of Bitcoin. But is it going to come out of more adjacent stocks, more sort of industry adjacent stocks?
I think it's definitely possible. And it's something we're seeing even this morning. There's really broad selling sort of across the semi space. Nothing is down quite as much as Broadcom, but people are taking some of the money off the table. And I think especially some of the companies that investors have been going for exposure to things like Anthropic and OpenAI are maybe top of mind.
It's an interesting point on this idea of adjacent sectors, because for a while, all of the space stocks were rallying really hard on this idea that we'd get a SpaceX IPO. But presumably, the indexes, when they absorb this, it's going to be a lot of industry indexes, right, that have to put this in. So other things get sold. So how are you and the team thinking about
ETFs,
that?
for example,
Yeah.
right? If you have a space ETF and they put all of a sudden 15%
and it's market
SpaceX,
cap weighted,
then Rocket Labs is...
Yeah. Virgin Rockets, whatever. So is the team really looking at that, kind of what specific industries might come under fire?
100%. You have to. These are huge IPOs, and they have a lot of enthusiasm and demand around them. People have been waiting for these for a few years now at this point. So indexing is going to be really interesting. I'm definitely thinking a lot about if SpaceX is added to NASDAQ 100 or, some of these bigger indexes very quickly, how is that going to change some of the volatility that we see in first-year IPOs? They can trade very choppily in that first year, but if you have that big index support, will that be different this time?
By the way, Vanguard's ETF just crossed $1 trillion for the first ETF that's ever done that, and I wonder how many people are just front-running the IPO, saying if I'm in this index, I'm going to get my hands on SpaceX. So I'm going to rush in.
I also think it's important to think about the first-year volatility. Keith Lerner put together a list of the 30. You saw that? The 30 biggest IPOs, and the year one max drawdown average was like 55%. So these things can swing. Carmen, thanks so much for joining us. Carmen Reinecke covers equities for us on the BN side of the building. Now, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. So basically, Jamie Dimon, the most respected bank CEO in the world, is going to pitch SpaceX shares to thousands of clients, and they're not even the lead left on this IPO. To me, this is really unique. Sri Natarajan covers Wall Street for us. He joins us on this story. I'm kind of freaking out about this a little bit. Is it too much? Is my reaction too much, do you think?
Yes, it is too much. I don't think there's any reason for you to freak out just because Jamie Dimon is talking to his clients. But the fact is, this is unlike any other IPO. You're not looking at a typical IPO roadshow where you're going to just the biggest institutional investors in New York and Boston and
Was
London.
there a roadshow? They just said you're paying $135 and that's it. There wasn't even a range, dude. When was the last time you covered an IPO with no range?
It clearly tells you that the bankers are confident, that they know that there will be demand, and that's the starting point, and they'll probably hope to go up from there.
Wait, so this isn't a pitch from Jamie Dimon then, right? Like, why does he need to convince any of the wealth clients to buy this thing?
No, he brings a little bit of sparkle. He is the star of the show today because you're not trying to sell investors on the value prospect and the growth prospect. You're trying to sell them on a grand vision. And short of Elon Musk, I think if you look at all the banks in the lineup, whether it's David Solomon at Goldman Sachs, Ted Pick at Morgan Stanley, Jamie Dimon at JP Morgan, of the three, one stands out really tall. And it's really smart of the JP Morgan bankers to bring him out to talk about this deal with their ultra high net worth clients. And in some ways, that is the beauty of a franchise like that, right? When you have the really wealthy clients, you want to be able to bring something special to them. One way to do that is to tell them you would get an allocation in a SpaceX IPO, which is a really big draw. The other way is to tell them you will get FaceTime with Jamie Dimon.
Maybe they don't want that IPO right away. We had someone on recently who basically is like, for wealth clients, maybe it's good that they don't really get access to this because they won't be in that period of volatility that retail will be in.
Right. Also, did you see Matt Levine's recent column saying they should make an IPO or an ETF, I'm sorry, that's X SpaceX, like X Anthropic, X OpenAI, because so many people are crying about the index inclusions. Sri, thank you very much for calming me down a little bit. Sri Natarajan, our chief Wall Street correspondent.
I like excited Matt.
You
should never calm down.
There's so much. Ed Ludlow has gotten me so pumped up about this. The fact that it's so unique and the fact that it's so unusual.
No, we should be. There's so many aspects of this which are groundbreaking. All
right, let's get to, speaking of groundbreaking, the Republican-led House voted to halt the war with Iran, breaking with President Trump on an unpopular conflict that is taking a mounting economic toll. The president blasted the move, calling it a meaningless vote in a social media post. Joining us now is Anne-Marie Hordern, Bloomberg's chief political correspondent, co-host of Surveillance. So this is a rare rebuke. I mean, normally, Speaker Johnson wouldn't even let this vote come to the floor, right? Somehow that happened. Well, he canceled it last time, right?
Right. And
because people were sick?
And 4 Republicans decided to vote with these Democrats, yes. To Trump's point, though, it's meaningless in the sense that the Senate would have to take this up, and the president's not going to stop this engagement, this conflict right now, and the Senate likely would not follow through on what the House did. But it's an important signal about where, especially members of the Republican Party, we have an election coming up in November. It's the midterms, especially if you have a district that's maybe more purple. This is going to be an issue, especially this summer, as we see gas prices continue to rise. The president telling the New York Post the blockade might stay until September. Amos Hochstein, which was the Biden energy czar, he's an individual who dealt with north of $5 a gallon gasoline, and he's saying right now we're basically living on the bottom levels of inventories. What happens when that runs out? and the Strait of Hormuz and the blockade still remain, you're going to see a tremendous amount of upside to the energy prices, which is why so many people think Trump in the end will have to concede something and take a deal.
Well, in the day-to-day volatility, we're looking at Brent crude falling about 3% this morning, and maybe that's optimism with the U.S. saying that Lebanon and Israel have agreed to some sort of ceasefire, but we've seen a lot of back and forth between the president and a lot of contradiction between the president of the United States and Benjamin Netanyahu.
Well, yeah, but for Iran, and the reason why they probably tried to really push this through in terms of Israel and Lebanon, and obviously I'm sure you've seen the reporting about the president's frustrations with Bibi Netanyahu, but for Iran, it's all one war. It includes Hezbollah as well for them. This is a major proxy of the Iranian regime. So they view this as one war. And that is why when you see more incursions from Israel or strikes in Israel on Hezbollah, the Iranians will start in terms of their strikes on U.S. allies. This past week, we saw really hostile acts from the regime. Did you see the airport terminal in Kuwait?
Yeah.
Did you see what is happening to the ballistic missiles and drones towards Bahrain as well? And right now, this administration is saying this is defensive. We spoke to the State Department spokesperson earlier this morning. He said this is clearly defensive. The question I have is, at what point will there be such a red line where you're no longer hanging on to the ceasefire? And the Wall Street Journal overnight said that President Trump, this is their reporting, told aides that he would consider ending the ceasefire with Iran if Tehran kills American troops. And we've actually already seen some American troops die, but you can see that the president.
But that's clear. I mean, if they do something that kills that takes American lives, he's going to have to strike back in a manner that
more
extends beyond
way,
a ceasefire, right?
But I think that gives you a sense of where the president is right now in terms of clinging on to this ceasefire and trying to get some sort of negotiated deal across the finish line.
And take any deal that's no longer the unconditional surrender that he beat his chest about on March 6th. So Anne-Marie Hordern is our chief political correspondent. She also co-anchors Surveillance, an excellent program. I recommend checking it out. Pushing for a wage price spiral, I saw this morning.
Well, I mean, the whole debate is like, why not ask for a raise?
Yeah, no, I thought it was fantastic. Check on markets right now. They're not supporting that, right? We're down 0.3%, but we were off 0.75% yesterday at the close. 75.48 is your level on S&P futures. We're also looking at a bigger drop for tech futures, down more than 1%. Even as yields come in, the 10-year at 4.45, 4.46, and Brent crude comes down. Brent down 2.65 right now to 95.17. So those signs should point to a rally. We'll see if this turns around at the open. Let's get a look at some of the other single stock stories on our radar. Five Below, tumbling after earnings that blew past estimates, but analysts are concerned the growth rate may be peaking.
Bad for them because Dollar General and all those other discount stores did well. Calvin Klein and Tommy Hilfiger owner PVH is falling after it lowered its outlook due to the war
Losing a full quarter
in Iran
of their value.
I guess we're
Are
not.
those still hot? No, they're not.
No, Anne-Marie is like this ain't the war in Iran.
Yeah,
this is nobody wants Calvin
That's
Klein
different.
anymore.
I mean, just talking about for the man on the street. Networking software firm Ciena raised its revenue outlook, but not enough to impress investors. That's the theme for today. You've got to beat the beat. We're going to talk to the CEO of Ciena, Gary Smith, in the next hour.
Coming up first, though, a major Blackstone fund now capping withdrawals after it saw a surge about 10% in withdrawal requests. We're going to talk more about that coming up next, right here on Bloomberg Open Interest.
Let's get now to high interest. Look what's making headlines around the world. PIMCO CIO Dan Ivascyn says the first sustained credit default cycle in years is already underway. He is warning investors to expect higher losses even as credit spreads remain near record tights. He points to looming debt maturities, risky 2021 and 2022 leveraged buyouts, and uncertainty around massive AI infrastructure spending as key threats to the market. And speaking of that, Partners Group says it may cap withdrawals across more evergreen funds as investors seek liquidity. A $15.8 billion U.S. private equity fund is expected to hit redemption limits after requests topped 5% of assets. The move follows restrictions on its global value fund and highlights growing pressure across private markets. I spoke with the CEO, David Layton, earlier this week about some of the pressures he's seeing.
I think that there are some idiosyncratic factors for this fund in particular, but indeed, you do see that investors broadly, after having redemption pressure within private credit for a number of quarters, are now starting to redeem other asset classes.
Meanwhile, Blackstone's private credit fund is putting the brakes on investor withdrawals after more people wanted their money back than the fund was willing to pay out all at once. Investors asked to cash out about 10% of the fund, but Blackstone will allow withdrawals on only 5% this quarter. The company says the fund still has plenty of cash coming in from loan repayments and new investments, and its debt levels remain low. Dani.
Let's talk more about this. We're joined now by Silas Brown, Bloomberg senior private credit reporter in London. Silas, it's probably notable that Blackstone shares are higher after this because we've seen a lot of these redemption flows come out and usually the stocks are hit. What is maybe different this time for Blackstone?
Well, I think, look, I mean, this is the second series of the private credit BDC angst story. And so I think maybe quite a lot of the pressure on share prices may have been kind of priced through the first quarter. And I think with Blackstone, I mean, we'll see how the day plays out. But I mean, the redemptions that they had were at 10%, which is kind of lower than a lot of the other industry peers that they have. I mean, Cliffwater came in at 17% earlier this week. So a few more reporting over the course of the next few weeks. So that may give some indication as to why. But I mean, yeah, let's see how the day progresses.
I wonder about, for one thing, Silas, it seems to me that there's some prisoner's dilemma at work here. Dani has pointed out,
I should just say that Scott Goodwin of Diameters for thinking that there's a...
And I know it's Scott Goodwin as well.
Yeah. I don't want to take credit for it. This is
but
Scott
I mean,
Goodwin
the point is,
Diameter.
some people are going to want out just because they think others will want out
Exactly.
and they want to get ahead of it. And I wonder if also a lot of the money that's taken out is still earmarked for private credit. So it's just going to go back into maybe a newer, better vintage. Is that the case, or are people actually lowering their allocations are institutions lowering their allocations to private credit?
Yeah, I mean, it was actually one of my favorite lines from yesterday's credit forum when Dani interviewed Scott Goodwin, and he spoke about the prisoner's dilemma, aka, this problem for retail investors, which is like, if I don't redeem and everyone else redeems, then I'm the one kind of left holding the bag. And I do think that is, having spoken to a few retail-ish investors, that is something that that they think about. Look, private credit performance, despite all of the kind of clear difficulties that are going on in the market, private credit performance by and large has still remained pretty solid. And I think, as long as that maintains itself, Blair Jacobson was on earlier today, and that was his point, that they need to demonstrate their kind of resilience through performance. And if that carries on, then I would suggest that, in the next quarter, they may see a bit of an easing off of retail redemptions.
And as fate would have it, I also spoke to Mike Arrighetti of Ares yesterday, who said a very similar thing to his colleague Blair. Silas, thank you so much. You're brilliant, and also because you complimented me, and
she likes
flattery
that.
will buy you everything. Silas, thank you so much. Silas Brown from our credit team. Coming up on this show, Nancy Tengler joins us as we see some weakness in the AI trade after Broadcom's earnings this morning. This is Bloomberg Open Interest.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues, and how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Just on my conversation with Ray Dalio yesterday.
No big deal.
No big deal. Let's bring in Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, so wonderful to see you. I mean, Ray Dalio's, on this sort of kick right now, basically saying like the AI bubble will burst at some point. It's going to happen when people start not just wanting paper wealth, but actual wealth and convert it. And we're about to see a lot of paper wealth created around SpaceX. In the meantime, it's a market that feels jumpy. I mean, Broadcom falling 15%. I just wonder, are we kind of vulnerable for volatility at these highs after such a big run up really built on this pillar of, chip makers?
Yeah, Yeah, good to see you too, Dani. And that was a great interview. I think a couple things. So note, that was a compliment. So, I think, of course, he's ultimately right. I mean, if it is a bubble, then it will pop. I'm just not convinced we're in bubble territory. There's still a tremendous amount of skepticism. That's a good thing if you're an investor because you want to climb that wall of worry. But also, you can juxtapose his comments against John Durr from Kleiner Perkins, who said, this is one of the great tech tsunamis ever. And so I think what we have to think about is in the short term, you get the flight to what's next. All of these stocks, CrowdStrike, Broadcom, have run up pretty heady levels ahead of earnings. And so I'm not surprised to see, in each case, triple plays where they beat and raised. It just wasn't enough. And so the short-term traders are turning their attention to what's next. This becomes a source of funds. Do I want SpaceX? Do I want Anthropic in my portfolio? Yes, I'm going to raise the cash now.
Yes. I mean, we can't talk about that enough today, Nancy. Broadcom added $270 billion in market cap in the last 5 sessions. Of course, they're down today. Even 200% AI chip growth isn't going to save them. We're going to keep you around because we love you. Nancy Tangler stays with us through the opening bell. We have stocks down 1/3%, almost on futures, I should say. This is after 0.75% drop yesterday. But remember, it was all-time high after all-time high after all-time high. I think 6 sessions in a row, 9 weeks in a row of gains. So we're still up at these very high levels, and we're looking at 10-year yields and oil that are coming in a little bit. This is Bloomberg. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are down just a little bit. We could see if this holds a second day of declines, which would feel so unusual in this climate. Right now, off 0.3. NASDAQ futures off so much more. It's been a while since I've seen a spread like this. I mean, the delta is almost a full percent, right? NASDAQ futures off 1.2%. You hear the opening bell at the New York Stock Exchange. SSMR ringing the opening bell. Sunshine Silver Mining and Refining. And you can see the little silver bars that they make. A lot of people think silver will be the currency of choice, post-apocalypse.
Wait, why over gold?
Because gold, you're not going to buy breakfast for a piece of gold. That's way too much money, right? True. So what preppers do is they buy rolls of 1965 and older diamonds. I mean, dimes.
Interesting.
Because those are
silver.
So that's worth about 1 breakfast post-apocalypse, apparently.
Okay, good to know.
INEO ringing the opening bell, the NASDAQ. They're doing an IPO. They make the Gensbacher engines out of Austria. Interestingly, Gensbacher Werke was actually bought by General Electric in 2003. Then it became INEO, and they put it together with Waukesha gas engines and diesel engines.
But do they play music at these things? Because they are decidedly dancing. There's a guy tapping his foot in the front, and I was not aware that music was being played.
I don't know, but they are all clapping to a beat. Each, it looks like to his own. And there's the confetti cannon as well.
Rhythm is tough. It's hard to have rhythm.
This company was originally, way back in the Austrian Tyrolean days, started by the Fugger family.
Interesting.
Of Germany.
Good.
The German Fugger started this company.
I'm gonna leave that there and show you what Blackstone shares are doing this morning at the open. We are up 1.6% for Blackstone. They've limited withdrawals from its flagship private credit fund, BCRED, for the first time. Investors sought to pull 10% of shares last time. It was more than 7%. They met all those redemptions. So a couple things. One, it's not as bad as some of their peers saw in terms of redemptions. They said they have plenty of liquidity, so shares are up 2%. But I should also just note they fell about 4% yesterday. There are those fears over what Partners Group was doing. It's a little bit of a rebound from yesterday and a little bit of, it's not as bad as it could have been. Yeah, for sure. Broadcom's strong outlook also was not as good as it could have been. It wasn't enough to impress investors despite being way above estimates. Shares down the most in a year, even with revenue growth overall due to jump 84% year over year. This quarter, the full year AI chip sales are expected to grow 180%, which is
at least double what NVIDIA, I think NVIDIA is looking at like 60, 70% growth, but of course at a much higher level. They sell about 4 times as much stuff as Broadcom. We're back with Laffer Tengler, CEO and CIO, Nancy Tengler. Nancy, how do you as an investor, I mean, if you're going to allocate some capital to SpaceX, if you're going to allocate some capital to OpenAI, if you're going to allocate some capital to Anthropic, that money has to come from somewhere, right? I imagine you would have to sell other stuff to do that. And there's so much money that's going to be sucked into those IPOs. Do you think it's going to have a visible effect on markets?
It could, Matt, for sure. And then let's not forget that most of Wall Street's heading out to the Hamptons shortly. So volumes will be a little bit muted, and that will exacerbate volatility. I think this summer is an opportunity. We are likely to get a correction. What we've been doing is trimming our winners, not selling them, but trimming them. So think Lam Research, Micron, to some extent AMD. We had been trimming Broadcom, and we will continue to do that as a source of funds because we want to be long this trade for a while. And to your point, the Broadcom report was excellent. And it's not trading at a lofty valuation. If you look at it on a price earnings to growth basis, it's trading at a PEG of 0.7 times. So it's not even at 1 time. And that is a benchmark for us. So we'll continue to hold it. And when it appreciates further, we'll trim back with new money. We'll buy some. But we're not adding to our positions here simply because we're at full positions.
Nancy, so can you just clarify? So you trimmed these positions, and what are you using that capital to deploy into newly?
We have been shifting, and I think I've talked about with you guys, we've been shifting for the last couple of months to software. And I feel like that was a good move because we've seen software run. We didn't believe the SaaS apocalypse, I can never say it, story. For some names, yes, and we are not in those names, we don't think. But for the winners, and we think there will be winners in the software space, and we were adding to cyber. So not just CrowdStrike, but Palo Alto Networks. And I think the CrowdStrike report, though you didn't ask, was also excellent. And the CEO said something very smart, George Kurtz. He said, look, cybersecurity is now a foundational AI infrastructure. And I think that is something that the market is underestimating because as we add to agentic AI around the enterprise, you have to be exposed to cybersecurity. I mean, you have to utilize cybersecurity, and you have to increase your exposure as a CIO at an enterprise company.
By the way, you were talking about John Doerr earlier. I see in your notes you quote him as saying AI is the biggest tech tsunami ever. The AI revolution is underhyped.
Right.
Where do you, I mean, I don't think we could hype it much more, but where do you see the underappreciation? You know, what is underpriced? Because you mentioned the valuation of Broadcom, and it's not terribly high. NVIDIA trading at a forward PE that's even lower, right? And then these companies like Micron, which are up 1,000% in the past 12 months, are trading at way lower valuations. I'm just looking at PEs. Obviously, you might have a different measure that you prefer for different companies, but where do you see the most value?
Well, I think interestingly, NVIDIA is a name that we recently added to our value portfolio. And before I hear the audible gasps, I mean, if you look at what they did with the capital allocation strategy, increase the dividend, and it's trading at a silly multiple compared to growth. So we did the same thing with Google about 2 years ago. And by the way, Google, I think Amazon, I think AMD were in the Russell 1000 value index. So while it seems counterintuitive because these names are still growing, we view them as fallen angel growth stocks. So I think NVIDIA is being overlooked and that the market will return its attention to it at some point. But beyond that, I mean, I didn't say it's underhyped, but I do think we're in the early stages of adoption. And we saw that today, I think, to some extent in the unit labor costs. Productivity continues to be strong. And unit labor costs came in or came down, if you will. And so I think that is going to be the driver. People are still working. The JOLTS numbers showed us that companies are still hiring. That the estimate was 800,000 jobs light of the actual number. none of these numbers are set in stone, as you both know. They'll be revised, but I think the trend is moving in the right direction. So companies are still hiring. We're not seeing unit labor costs driving inflation. So I think this is a pretty perfect environment to allow technology to continue to drive productivity and therefore economic growth.
I'm just wondering, you're in Scottsdale. Are you in Scottsdale?
I'm in Tahoe right now.
You're in Tahoe. I was going to ask, where's the Hamptons of Arizona? But I guess you've answered the question already. Alafra Tangler, CEO and CIO, Nancy Tangler, talking to us from somewhere in America. Let's get a check on the stock market. Right now, we're looking at losses in the cash trade. The NASDAQ down almost 1 full percent, Dani, but the S&P is little changed.
It's little changed. We did have a drop yesterday. We had 9 consecutive days of gains, so we'll add to a second consecutive day of losses at this pace. But as you point out, Matt, it's not a lot, because the thing that's really dragging us down was the only thing that outperformed yesterday, and it was chip makers. So in the positive column, you have all of the big tech names, the Mag 7s, which had a poor day yesterday too, so they bounced back. Eli Lilly, so you just have a who's who of the really large companies. And again, to the downside, it will be no surprise that Broadcom is at the top of the pile, down 14.5%, but we should just note it's run up a lot, but all the chip makers getting dragged down again after running up a lot. So not too much to see here. Ciena Corp, they're falling about 16%. We're going to be speaking to the CEO a little later in the next hour. Let's look at some of the sectors, though. Infotech, again, this is all the chip makers that's dragging it down, despite the fact you have some of the Mag 7 doing well today. Energy falls as the price of crude falls, too. At the top of the pile, you have some decidedly safety stocks, healthcare, staples, comms, again, that's Amazon, Meta, the other Mag 7s that are helping to lead us higher. And financials rebound after dropping yesterday, too, for an index that's just slightly lower this morning, Matt.
I think I would go to Flagstaff. I think Flagstaff.
Oh, is the Hamptons of Arizona?
It would be for me, I think, if I lived in Phoenix. You know?
I don't know the area well enough, so I'm going to have to trust you on this one.
We should explore it. We should look into it.
Sure, why not?
Coming up, Liftoff Mobile, a Blackstone-backed company, is set to make its trading debut today. CEO Jeremy Bondi joins us next. This is Open Interest.
Time now for our top calls, some of the analyst action that we are watching this morning. First up, the sell side is weighing in on Broadcom's disappointing AI outlook. Citi sees a buying opportunity. JP Morgan sees longer-term growth prospects. But Baird does highlight that customer-related headwinds do remain for the company. Next up, Five Below, they crushed first quarter expectations and raised its full-year forecast. But Jefferies and Citi say that the bigger question is whether that growth can last. Jefferies sees momentum starting to peak as comparisons get tougher. And finally, Bank of America upgrading United Health, saying healthcare costs are improving and setting the company up for a strong second quarter. They believe that lower costs could help profits recover faster and say that United Health is positioned well to keep earnings growing over the next several years, Matt.
All right, today, JP Morgan CEO Jamie Dimon will discuss the upcoming SpaceX IPO with the bank's ultra-rich clients alongside SpaceX's president and CFO. To me, this reads like Jamie Dimon is going to pitch SpaceX shares to his wealthiest clients. Let's get details about the live interactive discussion with Bloomberg's Bailey Lipschultz, fresh out of Lake Como. So, did you go to Villa d'Este?
I did. Okay, have you been?
No, I have not been to. I've been to Lake Como, but I've not been to the car show.
All I'm gonna say about Lake Como is it's beautiful.
Yeah.
Way too many tourists, and some of the villas, women are wearing, I'm not joking, dresses that you would wear to a wedding, and just for the Instagram photos. It blew my mind. I've never seen that before.
Interesting.
Cool.
I have been on very rainy and no one was doing cool Instagram stuff. Anyway.
All right, let's get to the
what
story
we're here to talk about.
The story that I was so jazzed about this morning, and Sri Natarajan kind of tamped it down a little bit. But to me, it's interesting to see this CEO who's so highly respected putting it on the line to sell SpaceX shares to clients when he's not even leading the IPO, right?
Well, it's part of the pitch, right? And the whole vision from the start from Elon Musk was leaning into retail. Again, whether that's high net worth individual retail or people who are buying and selling zero DTEs on Robinhood. And part of this pitch from Jamie Dimon, part of this event is really to lean into the JP Morgan brand. We also need to call out the fact that Bank of America is having their own conversations with both Gwen and Brett as well today. So it really is just part of the broader push to try to get retail and get as much retail capital and interest as they can in this IPO.
And Wall Street seems so jazzed about this. There's this story about Goldman putting up a rocket in their lobby, which I don't know if we have the pictures. It's not as big as
a real rocket?
I don't know. It doesn't look that big.
If you're so I'm from the great state of Ohio, right? We have the Central Ohio Science and Industry Museum, COSI, that every kid goes to. They have an actual rocket.
And it's big. But I don't
this
think
looks like just a picture of a rocket. Did they not just put up a screen with a picture of a rocket?
I think that's a small rocket in front of a screen. It's very confusing for our audience because they literally cannot see what we're talking about. But anyway, it's not the biggest of rocket. Anyway, it just feels like there's just so much hype and excitement, Bailey. I mean, I don't know. It just feels like in the IPO world, considering this is the biggest ever, that we don't really have anything to compare this to, and we're maybe venturing in a space pun into the unknown.
We are venturing into the unknown, and I want to call out this morning's roadshow that's dedicated or really focused for retail. Brett Johnson was talking about, the company CFO was talking about mining asteroids and something, and kind of these other futuristic technologies that they want to lean into. As you can see there's the photo of the picture of the rocket.
I think it looks like it's a screen of a rocket, but I think it's just that rocket's in front of a screen on a platform. Right? It's on a platform. Look, you can kind of tell.
Maybe. Then they chose a very small rocket for the world's biggest IPO. Like, they could have gone bigger. Right?
Well, it'll be interesting.
What are they making in fees on this? They could afford a bigger rocket.
The thing that's going to be interesting is the marketing around NASDAQ and Times Square and what we do see potentially next week when it does price, because we have seen NYSE and NASDAQ both kind of go full send, if you will, with different things. We saw that with some other IPOs as well.
Bailey, thank you very much. Bloomberg's Bailey Lipschultz. By the way, I had kind of heard, so, Goldman puts up this rocket, and Goldman's also behind the Liftoff IPO. So apparently there was this joke going around of Liftoff being like, that's our rocket, because our name is rocket related. Of course, it's not a rocket company, but they are going
What do you mean, of course, it's not a rocket company?
Sorry, you wouldn't know that.
I mean, I would have thought it was a rocket company or a mobile phone network operator.
It's the latter. And let's get into what the company is, because they're going public. The Blackstone-backed company is set to begin trading on the NASDAQ today under the ticker LFTO. It raised $437 million in a successful second attempt in going public this year. And let's bring in the CEO, Jeremy Bondi. Jeremy, so great to see you. And there are going to be a lot of questions of why IPO in the midst of all this. But maybe it would also be helpful just to describe to our viewers who don't know what Liftoff does, because it has a rocket name, but it's not a rocket company.
Yeah, it's great to be here, Dani and Matt. Thank you so much for having me. There are indeed 2 rockets in the Goldman building this week, and we are honored to be sharing Rocket Week in New York with SpaceX. Our business was built to help businesses grow and monetize within the app economy. And we do that across every single category you can imagine. I heard you talking about Instagram a few moments ago. Social is one of the verticals that we engage with. We've been at it for about 14 years now, and we're really excited to be going public today.
So what exactly does that mean, though? Monetization in the app economy. It's a good tagline. Well, maybe it's not a good tagline, because I still don't really get it.
Yeah, great question, Matt.
Does that mean you're doing marketing campaigns on Instagram?
Yeah, great question, Matt. So what we do is we help developers integrate advertising into their apps. So there's 4 million apps in the App Store today, and they currently can integrate our software developer kit to help show advertising to support their business. We also help every single category of apps that you can imagine. For instance, Knicks won last night. It was a great game. A lot of predictions being placed in sportsbook action. We work with players across the prediction market vertical as well as OSBs to help them find profitable users across the app economy. So it's growth and monetization that we do through advertising across this burgeoning app ecosystem. People spending 3.5 hours a day on their phone.
Well, Jeremy, I spoke with some of the Blackstone crew, and as you'd imagine, they are very pumped, and they did nothing but sing your praises and how incredible of a CEO you are. And you've been through a lot. I mean, it's tough, right, in the beginning of the year to think that you're going to IPO and have to pull it. What has this process been like to get it off the ground? Sorry for the pun. To lift off, actually, this time around.
Yeah, it had to come up. That makes sense. It's Rocket Week. Well, Dani, thank you for that. It's very generous from the Blackstone team. This has been a everyday labor for many, many years to build out this ecosystem, and we've been market making in advertising in the app economy since its inception. The business has now grown 10 consecutive quarters since our release of our new recommendation engine. And we think we're just getting started. We're really excited to start this new chapter. Market is early. We have a strong position, and we're really excited to go forward.
And Jeremy, just to remind our viewers who maybe don't, the first time around, the reason you didn't IPO is because it was in the midst of the SaaS apocalypse and comps are really difficult. But now it's a pretty difficult environment, too. There's a lot of attention going to SpaceX. We're going to be getting Anthropic and others soon. There's also this monster Alphabet offering coming into the market. Jeremy, isn't there a concern at all that you're competing for the same institutional capital by coming to market this week?
The February roadshow that you're referencing was actually a phenomenal experience for our team in terms of getting investor enthusiasm and testing our thesis. And what we saw, as you mentioned, was pretty choppy conditions in the market. We went back, we delivered our 10th quarter of growth. We further reinforced the empirical evidence and the pattern that we've been showing the market. And we were excited to come back out here last week, and we were met with even more enthusiasm. I think what investors are seeing is that this business is in the AI winner camp. It's a recommendation engine that's built on neural nets. And we hear a lot of conversation about action-based pricing, outcome-based pricing. This category was the first to bring that to market. So I think there's a lot of enthusiasm as we sift through who are the AI winners and maybe who will have to redevelop their foundation.
What kind of growth, by the way? I remember seeing some stats last year that you were up like 40% in your core advertising business. What kind of growth are you expecting now, Jeremy? If you could quantify
Matt, that's great research. We are a compounding engine, so we focus on growing quarter over quarter. As I mentioned, we've done that 10 quarters in a row now. We continue to feed our model with data. We get $160 billion of purchase data from our advertisers annually that feeds into that model, and we attempt to find breakthroughs with our model each quarter. And so we release a prudent guide to the market while we live to beat that guide. The market on a blended basis, we see growing at 11% CAGR. We expect to beat that. Everything above that, we certainly aspire to do, in the empirical evidence of the last 10 quarters at an average rate of 8% quarter over quarter, I think shows what's possible. But we want to be prudent and responsible as leaders of this business and grow confidence from our shareholder base.
Under promise and over deliver, dude. Thank you so much.
That's the goal.
For joining us. Liftoff CEO
really
Jeremy Bondi talking about Rocket Week. Coming up next hour, we talk about how mega IPOs are minting more wealthy private flyers with the president of VistaJet. That's next. This is Bloomberg. Check on markets as we get to the top of the hour here. We're looking at continued losses, although they're slight on the S&P 500, 0.2%, 75.42 the level in the cash trade. The NASDAQ down much more, 1.3%. So much bigger loss. 30,184 still a pretty high level there. 10-year yield coming down, 445, 446 if you round up. And Brent crude also off about $3 a barrel to 94.86. In the next hour, we're going to hear from Ciena CEO Gary Smith, plus Catherine Bourdelamet from Goldman Sachs and the president of VistaJet on private jet demand. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Dani Berger. Markets fall for a second consecutive day after a big run, this time from Broadcom. The reason behind it.
Yeah, Broadcom and CrowdStrike not doing enough. It's a disappointing outlook from the chip maker. Broadcom says they will only have 200% revenue growth in the AI business.
And there's SpaceX, OpenAI, Anthropic, all of them eyeing Wall Street this year could turbocharge global wealth creation. We'll be following the money.
A rare rebuke for President Trump. The Republican-led House votes to stop the war with Iran as peace talks falter, but the president calls the move in Congress meaningless.
We begin this hour with a warning from Ray Dalio. I spoke with him yesterday at the Forbes Iconoclast Summit.
A very small percentage of the population is going to do unbelievably, and a lot of people won't. So what do? Can we work together politically to deal with those issues, and how do you do it? I do not believe, I'm not optimistic on us working together to solve.
So what's the end? Is it a bubble that bursts eventually?
I think it is, yes.
Let's get the view from Catherine Bourdloumet, Goldman Sachs Asset Management Co-Head of Equity Client Portfolio Management. And Catherine, for as much euphoria as there is, you can always hear bubble warnings within them. How are you handling this market? How are you thinking about where we go from here when we hit record high after record high, and there's so much excitement about giant IPOs, big equity offerings? Is it just gung-ho and we continue to melt up?
Yeah, well, look, it's all about the earnings. And if the earnings continue to deliver, so will the equity markets. Corporate profits as a percent of GDP are now at a record high. And we know, obviously, technology companies are driving the earnings growth, but we've actually seen pretty good breadth. So 10 of 11 of the S&P sectors have positive earnings growth. We're seeing that broaden down in market cap, as well as outside the U.S. And of course, the key fuel here is going to be this relentless commitment to Capex spend. So we all know the numbers, many trillions of dollars, but I think what's changing now is we're in a kind of the year of the enterprise adoption. So we're moving more into agentic AI. And if you look over the last few years, as we shift from the chatbots to agentic AI, this is commanding something like 1,000% plus compute, and that's only ramping up further. So if we continue to see that through the earnings, we'll continue to see it through the equity
Isn't
markets.
that also bad for margins, though? Because that's expensive. I mean, there have been stories of, investment bankers using as much compute as their salary is in just a few months.
Yeah. And the price looks like it's going to go up, right? Yeah. Because it's supply constrained.
Yes. So, well, efficiency is also the next thing that you're going to work towards and focus on. And what we're really focused on is what are the bottlenecks of the supply chain and kind of the next wave and identifying those inflection points. So we have one of the longest standing, most experienced technology teams in the industry, and we've kind of been focusing on first, we found the ASICs trade, then started to continue to have the overweight to semis, focusing more on the software side. And then I'd say, actually, I think the next wave as it comes to the AI, which people are now focusing on, is actually potentially China. The market in China is not up anywhere near where we're seeing other places like Korea and Taiwan, but they're able to create these models at 90% of the cost, but they're also 90% as good. And they're also the world's biggest consumer of tokens. So 1 year ago, the token consumption daily in China was about 100 billion. Now we're about 100 trillion. So I think the next leg of the trade, especially where we can find bottlenecks or things that are not being priced in by the market, will be the opportunity we're focused on.
By the way, it seems like, speaking of bottlenecks, there's so many mega IPOs coming to market that it could suck up some of the money going into other shares. Like maybe you want to put more money into SpaceX, OpenAI, and Anthropic, so you're going to sell out of Broadcom today. On the other hand, there's so much money that it just doesn't matter. I mean, Google can come to market and say, hey, we're going to do a secondary for like 85 billion, and the market says no problem.
There is a lot of capital, but actually the supply-demand balance is pretty healthy. So if you look at all the issuance and you put the new issuance and the follow-ons together, that gets you to call it close to $1 trillion, and that's balanced with call it $1 trillion of what we're expecting in the buybacks. So the demand, I think, is going to continue, and I think what you're going to find is at the company level, that's where you're going to see the differentiation. That's when you're going to see the divergence.
How do you think about the demand for equities compared to fixed income? Because we hear from so many people that there's just so much money out there. If you can issue it, we're going to buy it, right?
Yeah.
And it'll be oversubscribed like 10 times.
Yeah. So from what I see in my seat is the flows are just keep pouring into the equity markets in U.S., We're seeing more kind of diversifying flows too into other themes, whether it's related to defense, economic security outside the U.S. down to market cap. So there's plenty of capital. So I don't foresee that as an issue for equity markets.
It's a pretty sweet time to be a passive investor. If you're invested in the S&P 500, not only have you seen good returns this year and record high after record high, you're also going to get the SpaceX IPO. You're going to get Anthropic. You're going to get OpenAI. And maybe indicative of this, I mentioned this to Matt earlier this morning, but Vanguard's S&P 500 ETF has been the first one to cross 1 trillion. I mean, why not just chill out in these passive funds right now? Like, is that just a great move? Because you also, again, get your hands on these IPOs, which are so coveted right now.
Yeah, my highest conviction view, hands down, is now is the moment to pivot into active. I mean, we're seeing single stock level volatility higher than the benchmark. We're going to continue to see unprecedented level of divergence. So you already see bifurcation. People are talking about the bifurcation with consumer. If you look within categories, you see big bifurcation. Like look at Planet Fitness versus Lifetime Fitness. Very similar companies, totally different outcomes. So I think the investment imperative going forward, as we have elevated uncertainty, elevated volatility, and elevated velocity, is to have company level selection. So leaning more active, I think, is going to be the success for the summer and going forward.
Lifetime Fitness is way more expensive than Planet Fitness. So
but
that's
it's
the
catering
idea,
to
right?
it's catering to the higher end consumer.
Yeah, and pickleball players.
And pickleball players.
Oh, yeah,
they're huge on pickleball.
Pickleball is a durable theme, clearly.
Catherine, great having you in here. Thank you so much for joining us. Catherine Bourdelamet.
I think Apollo's doing like a pickleball roll-up even.
Yeah?
I think private equity is getting into this.
All I know is we need more. We need more courts.
No, they should all be tennis.
She's a tennis player.
They should all be tennis courts, Catherine.
All right. Thank you so much for joining us, Catherine Bourdelamet from Goldman Sachs. Now, the Republican-led House voted, I should say. They didn't vow anything. They voted to halt the war with Iran, breaking with President Trump. The president called the move a meaningless vote. Joining us now is Washington correspondent Tyler Kendall. And I get, Tyler, what the president means, that it's not going to result in the end of the war. But surely it's turned some heads in Washington. No?
Right. It's the sharpest rebuke that we've seen yet, Matt, when it comes to Congress making their thoughts known about how the president has moved forward with the conflict in Iran. But to your point, President Trump's comments about it being meaningless do have some merit, right? Because this measure would have to pass the Senate. It is possible that could happen. We did see a very similar resolution move forward last month through a key procedural hurdle that was seen as sort of testing the groundwork here. So it's very possible that it could pass the Senate. But even if it does, then it would end up on President Trump's desk and he would veto it. But still, it is more of this symbolic push, particularly when you look at the Republicans that did cross party lines and decide to vote in favor of it. Yes, one included Thomas Massie, of course, a thorn in President Trump's side. He didn't win his primary race. But the other key Republicans that voted here represent some really distinct battleground districts. I'm thinking about Congressman Brian Fitzpatrick, a Republican from Pennsylvania, who also, by the way, voted against the One Big Beautiful Bill over those cuts when it came to Medicaid. So it just goes to show how this foreign policy issue is increasingly becoming a domestic policy issue as we get closer to the midterm elections. You had Congressman Fitzpatrick come out and say that the reason why he voted against this was the affordability issue and the pressure that this is putting on prices for Americans at home.
Tyler, where do we stand at the moment? Because the U.S. has said that Israel and Lebanon agreed to a ceasefire. You're seeing oil prices fall this morning about 3.75% because of that. But we've seen before the president and Benjamin Netanyahu giving very conflicting messages.
Yeah, actually, Dani, within the last hour, we got some headlines from Hezbollah's chief official saying that Hezbollah is rejecting this ceasefire agreement between Israel and Lebanon because the agreement that the State Department announced overnight is contingent on Hezbollah stopping its fighting. And it would require the Lebanese army to take over once Israeli troops withdraw. But we would also need to see Hezbollah's troops withdraw from this area near the southern border. This Hezbollah official came out and called the negotiations, quote, absurd. So it is definitely seeming to throw some cold water on the idea that we could get peace in that region. And Iran has repeatedly maintained that there needs to be a ceasefire in Lebanon in order for the U.S.-Iran talks to move forward. And even as the White House says that this is a completely separate front, we do know that they are very cognizant of how it does risk risk derailing the negotiations. That's why President Trump has gotten personally involved in talking to the sides, talking to Israel, and talking to Hezbollah officials. But Dani, we heard from Iran's foreign minister, according to Iranian state TV earlier, saying that there has been, quote, no tangible progress made recently, though both sides are still maintaining that they do see diplomacy as a viable option here. But we have to keep in mind we've seen some of the worst flare-up in fighting in recent days. Just yesterday, we saw Iran firing missiles and drones at both Kuwait and Bahrain in response to the U.S. stopping this tanker that apparently was headed towards an Iranian port.
Tyler, thank you very much for that this morning. That is, of course, Bloomberg's Tyler Kendall. Let's get a check on markets at the moment because we're falling. A really, really big underperformance from the NASDAQ 100, down 1.5%. That's all thanks to perhaps Broadcom this morning and all the other chip makers that had been supporting this market, because in the meantime, yields are falling, oil is falling. It's what we're discussing with Tyler. Brent crude down 3%, 10-year yields down by 4 basis points with an S&P that's down just 0.1%. A look at some of the single stocks moving in this hour. As I mentioned, Broadcom delivering an AI chip forecast that fell short of Wall Street's highest estimates. Expectations were high. Sell the news down 15%. And don't miss our interview with Broadcom CEO. That will be tonight at 7 p.m. New York time.
Blackstone limiting withdrawals from its flagship private credit fund for the first time after investors sought to pull only 10% of the shares compared to Cliffwater's 17. It seems pretty good. And as a result, the shares in Blackstone are up 3.7%.
And then there is Ciena getting crushed this morning, down 19%. Some solid results, not doing enough to lift the stock with high expectations.
Coming up, we're going to break down the results of Ciena with the CEO himself. Gary Smith joins us, as well as Romain Bostic from The Close. This is Bloomberg Open Interest. Ciena raised its revenue forecast, but the stock is falling this morning as investors weigh whether the outlook is enough to justify sky-high expectations fueled by the AI boom. Shares have been on a tear the past year on strong demand for optical networking at AI data centers. Joining us now is the CEO of Ciena, Gary Smith, along with Bloomberg's Romain Bostic.
Hey, Gary. Thank you, Matt. Gary, great to have you here on the program. 40% revenue growth in the most recent quarter. The guidance, a little bit more measured, if you will. And I'm wondering if you can start there. When you listen to that conference call, you talk about an addressable market potentially doubling by 2029 to $50 billion. You're sitting on a backlog of $7.7 billion. Why didn't you raise your forecast maybe a little bit more aggressively?
Well, we raised our forecast for the full year, which we've done every quarter so far. We've grown the business 40% so far this year, year on year. And we've quadrupled basically our earning power from this time last year. So I think, from our point of view, it's full steam ahead. And we feel very strong that this is a very durable demand. I think networking generally has been underinvested in from an AI ecosystem perspective. And we're seeing enormous amounts of demand from the hyperscalers and the service providers basically to facilitate the infrastructure of AI. Nothing happens on AI until it comes out of the data center, and it needs the network.
Absolutely, and to a large degree, it needs Ciena, as you still remain the dominant player there. But when we start to talk about the shifts in the way that these data centers are being built and making sure that these latency issues are addressed, you've seen NVIDIA start to develop its own switching protocols that are more directly tied to its chips. You've heard of Microsoft and other companies, some of the hyperscalers also trying to do the same. Are these companies still going to need Ciena by the time that TAM opens up by 2029?
Absolutely is the answer to that. What you're talking about really is optimizing distributed compute. What we're all about is actually the physical connectivity. So you think about these dynamics around compute, particularly when you've got constraint on compute, that actually requires more and more networking to actually connect these data centers. So we're, super confident that over the next few years, more and more optical connectivity will be required to facilitate the AI infrastructure. And that, optimizing that compute really just requires more networking.
Gary, I I get to hang out with Romain a lot, and he's always talking about optimizing distributed compute. How is what we're looking at now different from what we saw in the tech bubble? Because back then, investors were paying so much to lay miles and miles of fiber that didn't turn profitable for years after that. And all of the big stocks, yours, Cisco, and the others, took a huge hit, went pretty much to zero. For many years, again, investors were burned for so long. What's the big difference?
Well, I unfortunately do recall that, and I have the scars from that period, so I empathize with that, and I'm suitably paranoid around it, as you'd expect.
Yes.
This is a very different set of dynamics. I describe that as sort of the first coming of the internet. We built it and no one came. And then that really enabled the sort of models that we're very familiar with now, the Amazons and the Ubers, et cetera. This is a very different dynamic. As soon as we build it, we can't build it fast enough for traffic to come on the network. And you think about all of the ecosystem that's gone into the AI world, GPUs, power, space, et cetera, language models. Now it's about the networking. To really not strand all of that massive amount of investment, you need to connect these data centers with high speed, low latency technology. And that is what Ciena does best in the world.
But one of the pitfalls that we saw back during the late 90s and early 2000s was this idea of the build out of this capacity at a time when a lot of the end clients didn't really have a business model in place to effectively use that capacity, or at least I should say more importantly, to monetize that capacity. You don't see parallels to that today? You think your end clients have a business model ready to go that is actually going to sustain their demand for your services?
The answer to that is yes. And that's largely right now driven by the hyperscalers. And they have a business model that is scaling up on AI, is profitable, and for every dollar they spend, they get more than $1 back for it. So I think it's absolutely got substantial business models that are proving out. And that's before you really get into the enterprise adoption, which I think is largely all in front of us.
So, where is that going to play out the biggest? That's what Jensen's been talking about as well. I think, he talks about $60 trillion worth of enterprise companies that are going to be using this. Who benefits first? Who benefits the most?
Well, I think right now it's the hyperscalers making the big investments.
No, I mean beyond that. What industries? We've heard so much about how healthcare is going to benefit. Finance should benefit, but we don't see that in the returns. Where are enterprise customers going to actually be profitable, going to be monetizing AI?
Well, I think we're still in the early stages of that adoption, frankly, and it's taken longer than anybody would typically imagine because you have to change workflows. And that, takes a little bit of time. But the progress that you are seeing across the enterprises, finance, healthcare, industrials, et cetera, you are beginning to see that now. And companies like Ciena is adopting AI. We're seeing tremendous productivity gains in our services business and in our ability to get product out quickly. So that will begin to translate into economic benefits for the general enterprises as well as the hyperscalers.
Gary, do you have any concerns about some of the concentration risks with regards to your revenue sources right now? You said in the most recent quarter, basically about 34% of your revenue came from two companies. I know you don't name them, but anyone with the Bloomberg terminal can figure out pretty quickly who those two companies are. If they pull back in any sort of meaningful way from some of those Capex commitments, what does that do to your forecast?
Well, I think from our point of view, it's not necessarily about the total Capex that's spent, it's what are they spending it on. And increasingly, to my point, the constraint is around the network. Mm-hmm. So to enable all of the optimization of their investment, they really need the connectivity. And so, from our point of view, it's not about how much absolute Capex, it's what they're spending it on and percentage of that for networking. And that continues to increase. And our exposure is across all of the major hyperscalers, neoscalers, and the large service providers around the world.
Just to wrap this up, though, Gary, and I'm just wondering if you could kind of just address less the issue of revenue growth and the growth of the company overall, and more importantly, the idea of maybe potentially expanding margins. That expansion has been relatively flat. And I understand there are some cost inputs and price inputs that are sort of factoring into that are beyond your control. But does this become more of a profitability and margin expansion story longer term? if at all?
Absolutely. And you're seeing a 4 times increase in our profitability year on year so far. And we think there's an enormous amount of operating leverage that we have in this business. We've demonstrated it over the last 18 months. We have an enormous backlog that we're confident will ship out in 2027 and beyond. And we're dropping that to the bottom line. You know, we've had an incredible improvement so far. And our unique operating model, we're the only focused optical systems player in the world. And we're able to drop that to the bottom line because of our leading technology, customer relationships, and the unique model that we bring to the market.
Gary, great having you on the program. Thank you so much for joining us. The CEO of Ciena, Gary Smith, and Bloomberg's Romaine Bostick as well. You can catch Romaine, of course, today as every day on The Close. That show kicks off at 3 p.m. and takes you through the closing bell. Still ahead on Open Interest, the AI boom creating a new wave of millionaires and billionaires. The president of VistaJet joins us with a real-time, and one trillionaire. The president of VistaJet joins us next with a real-time look at where global wealth is headed. This is Bloomberg Open Interest.
Let's get a check on your markets. Almost an hour into your trading day, and now we're moving higher, barely, up 0.04%. The Nasdaq, though, that still falls as Broadcom and the rest of the chip sector drags it lower after earnings that didn't meet the highest of expectations. Your 10-year yield, that falls by 3 basis points, and Brent crude down by 3%. Coming up, the world's rich are getting richer, and the president of VistaJet joins us on where that wealth is moving. It might just be private jets. That's next, right here on Bloomberg Open Interest.
The world's rich are getting even richer. Last year, and there are more of them than ever before. A report shows the number of millionaires globally rose by 2 million in 2025 to a record 25.3 million. At the same time, private jet travel is offering a window into where that wealth is moving. Joining us now is VistaJet President Leona Keene. And Leona, this is, I guess, great for your business to see a SpaceX IPO and then later Anthropic and OpenAI, because it just creates so many more customers for you, doesn't it?
Definitely. We've seen a trend where wealth is created faster than ever, and also just the level of wealth. So last year, we've seen an increase of flight traffic around the world about above 30%.
How does the behavior or is the demand any different when you have a lot of these first-time jet buyers, flyers, what have you, coming in to the market? Do they behave differently than your classic customer?
Most definitely. So last year, 2025, 47% of the new entrants to private flying with Vista, they were under the age of 45. And their way of thinking and thought and how they're behaving is a lot different from a decade ago. It's less about possession. We live in a very much experience-based economy other than a product-based economy. It's more about efficiency, mobility, and flexibility of where they're going. And we're also seeing a trend where, because of the entrepreneurs and inventors, they're global citizens, and there's a blend of business and lifestyle traveling. So life is part of the work, work is part of the life. So we're definitely seeing that trend as well.
What level of wealth do you have to responsibly fly private? I mean, what's the cutoff?
I would say with us, with Vista, because we're flying the long haul, and also regionally we're doing the super mid, around 200 million and above US dollars.
Does it change at all as fuel prices go higher? Does that sort of put a cap on maybe, not a cap, maybe a floor on prices, but a cap on who's actually using this and can afford it?
We haven't seen a drop with the fuel price rising up with our customer base. I think that's a thing with flying private. That's the reason it's also called business aviation, because it's less about a luxury purchase. It's very much about traveling for business, the efficiency. They actually need to get there in a certain time.
What separates Vista from your competitors? Like, I look at your fastest growing city pairs and I see a much more global picture than I would expect. It's not just San Francisco, to Vegas. It's Jeddah to Riyadh. It's Abu Dhabi to London. I see Nantucket, New York. So what's different about Vista?
Definitely. It took us over 20 years to build a very much global business. So our footprint, we've flown to 97% of the world. And our business, United States, we see is still the epicenter of business traveling and business flying. However, there's a lot of corridors that are rising up. For example, the Africa-Asia Pacific corridor is less about, it's not just a tourism spike. It's very much you see the infrastructure and economy is building up the ties. That's why a lot of times we see this as an early indicator of where money is moving. And really the effect comes after.
What is the supply chain like? Are there any bottlenecks as you double down on long-haul aviation and get the proper jets that allow you to do that?
Most definitely. So maintenance, supply chain. So that's why over the years, we invest a lot in terms of we in-house some of the maintenance centers and work very closely with Bombardier, the manufacturer, to make sure that we can maintain our aircraft.
I wonder, because you probably often have a chance to fly private, is it then crippling to have to fly commercial again after that, or what is the experience
it's gotta be,
like?
Right? I have to say it is after you, that's why a lot of times people say that flying private is addictive. Your product is addictive. Not so much about, obviously we pride ourselves in offering the best in-flight experiences, but really it's a time machine. It's really a time machine. It's how you can arrive and function at your very best. So we, on board, we have 5G network connectivity, and we wanted to make sure that our customers, just because they're taking a flight, their lifestyle is not being interrupted. If you're taking a flight to Singapore from New York, you could use that time to rest, but also you could conduct your board meetings, you could do calls, and you can stream. If you're a sport team owner, you can stream a game. So really, your life does not stop when you're flying private.
Well, I mean, apparently British Airways is going to start allowing passengers to start making calls via Starlink, which is horrible. Can you imagine being on a commercial plane and everyone is on the phone? But isn't there some?
I would say please get your own plane if you're going to do that.
Yes, true. But isn't there some element? I mean, I feel like maybe we've all had the experience of getting on a plane and being like, oh, thank God there's no Wi-Fi. I don't have to work. I can just like turn off and disconnect. Isn't there some joy also to just kind of enjoying the quiet of a plane ride
you're
and
raw
not
dogging it on a flight
I
to
didn't
Europe?
say you were raw dogging it, but you're just not working.
I think there's definitely that element, but I think the important thing is that we live in a world where you would like to have that choice. If you do want to conduct business, you could obviously rest and go to sleep, watch a movie. But I think we live in such a digital world. And if you're in cryptocurrency, it's very important you're connected at all times.
Just tell us quickly about your origin story, because did you go to Princeton and then you worked on Wall Street?
Yes.
How do you come up to end up here?
So when I was on Wall Street, I was in asset-backed financing, and back in 2012, I started a company with two other colleagues to finance private airplane, because at the time there was a void in the marketplace. You could go to AirCap, for example, to finance a fleet of commercial aircraft and to lease it. There's no operating lease products in the marketplace to finance private airplanes. The only company I think that came close was GE. So the company that I ended up funding was Global Jet Capital, and bought the entire GE portfolio of the corporate aircraft. And that's how I knew Vista, because at the time, Vista placed a historical order of a fleet of Bombardier aircraft and needed financing. And that's a unique business model. We own our fleets, take away the asset risk and operational risks from our customers. They only need to worry about how many hours they need to fly, and then they're good to go.
Did you already love F1 racing before you got into this? Because you're a sponsor of Ferrari.
I have to say, not really, but now I love it.
That's okay. There's a lot of us that are new to the sport and love it. It's no problem at all.
That's fine, especially since
F1 is more popular than ever, right? The Drive to Survive from Netflix. I feel like the drivers before, because they're always wearing a helmet, so it's difficult for fans to see them in real life. But really, the documentary really helped. Now they're superstars.
Yes, and now you're a dedicated member of the Tifosi. VistaJet President Leona, thank you very much for coming in. Let's get a check on what's going on in these markets, maybe adding a client or two for Leona here as the S&P. It's not up, but it's not down, and it's holding at 75.52, which is darn near a record high. We're looking at the NASDAQ, which is falling much further, 1%, but still over 30,000 at 30,255. The 10-year yield coming in is helpful at 446 to stocks, and of course Brent crude coming down 254, also helpful to stocks at 95.29 a barrel.
Some of the single stock movers we're also watching this hour. Five Below, they raised their profit guidance, but they did signal caution over the consumer in months ahead. A very different consumer to VistaJet. Shares down 13.5%.
And Calvin Klein and Tommy Hilfiger owner PVH also not flying private. They're lowering their outlook due to pressure. They say pressure from the war in Iran, but it could be that it's just not cool to wear that stuff
Yeah, just
anymore.
no one buys Calvin Klein. I think that maybe is more likely. Finally, Petco, they delivered a disappointing profit forecast, even as it returns to positive revenue growth for the first time in nearly 2 years. That also gets crushed, down more than 16%.
We didn't mention, but I got to say, having pets is probably one of the number one motivators
why
to
people
fly private.
Absolutely.
Yes. All right. College mergers gain momentum as schools fight to survive. The U.S. Undersecretary of Education Nicholas Kent joins us next. This is Bloomberg Open Interest.
The Education Department wants to move faster on college mergers. This comes as schools face financial pressure, falling enrollment, and higher costs. A new report shows that 442 private colleges are at risk of closure or serious financial distress. Joining us now is the U.S. Undersecretary of Education, Nicholas Kent. Thank you so much for joining us. And I would love to just first off baseline, what exactly is the aim? What kinds of rules are you changing to make it easier for this kind of thing to happen for colleges and universities in the U.S.?
Well, Dani, first, thanks for having me. Listen, I'm going to say the quiet part out loud. We have about 6,000 institutions of higher education in the United States, and not all of them are going to make it out of the next decade, because of enrollment, demographic changes and enrollment pressures, financial challenges, the cost of higher education being too high at the moment. We're seeing a contraction in higher education, both from the enrollment level as well as the physical space of institutions. And so the Department of Education under the Trump administration is really focused on making sure that institutions that want to enter into partnerships through mergers and acquisitions have an easier time in doing that.
I was under the impression that the Trump administration wanted to shut down the Department of Education, or at least shrink it to almost nothing. How are you doing on the path to that, and what would remain? What would you like to have left at the federal level for the Department of Education?
Well, Matt, thanks for that question. It is true. The president and the secretary of education have been very clear that we are all about returning education to the states. But we can chew gum and walk at the same time. We still have an agenda. We still have 6,000 institutions of higher education in this country that need to be looked after, that still receive federal funding. And we want to make sure that that federal funding is going to good purposes. And so, one of the things that we are really focused on is making sure that we are not necessarily, making sure that every institution survives over the next decade. That is not our job. We will see a natural contraction. But where institutions of higher education want to engage in partnerships through mergers and acquisitions, we want to make it easier for them. The previous administration made it increasingly difficult to enter into these partnerships. A merger or an acquisition for institutions that want to engage in these thoughtful partnerships could take upwards of 2, 3, 4, and 5 years. We want to speed up that process so that for institutions that want to engage in that they can.
Secretary Ken, is there not some concern? Look, private capital has a lot of money to put to work at this moment. And by loosening some of the rules here, you're going to have these types of entities come in and buy colleges and maybe do things that aren't in the best interest of students, but are in the best interest of profitability, like stripping them for real estate value, cutting costs massively in a way that's harmful to staffs and ultimately students. How do you put guardrails in against that?
Yeah, this is something that we're absolutely looking at as we embark upon our rulemaking to make mergers and acquisitions move faster and easier. We don't want to put our foot on the necks of private capital. We think that private capital does a lot of good in education. However, as you had mentioned, there are some safeguards we need to make sure that are in place to ensure that at the heart of all of this work are students and consumers and taxpayers. So we do want to make sure we have adequate guardrails and protections in place. And this is something that the Secretary of Education and myself are really looking forward to having a meaningful conversation as we embark upon this rulemaking later this year.
I want to ask about, yesterday we were talking with Morgan Stanley economist Ellen Zentner, who said, the U.S. and China are in a race to win at AI, essentially, and that the U.S. will not lose under this administration. How do you encourage better adoption, more efficient adoption of AI in universities? Because I'm sure there's still things that you want to encourage at the Department of Education.
Absolutely. Listen, out of most industries, higher education has been involved with AI for decades. And so it's really important to sort of understand that first and foremost. However, what we're really starting to see is educators spend more time with AI, right? Whereas before, higher education really focused on AI in the context of research and innovation. But now we're really starting to pay attention to it in teaching and learning, in addition to shared services. Matt, one of the things that I'm most excited about as I meet with college and university leaders are conversations about how they're leveraging AI for back office supports, right? And those back office supports that use artificial intelligence are making efficiencies in higher education better and go further. And what does that do? It's helping it to reduce the cost, right? And we're hopeful that by leveraging AI in this very innovative way, the institutions will be able to continue to lower costs for students and families.
Secretary Kent, you certainly have a lot of initiatives that you're hoping to push through for universities and colleges. But at the same time, it's also a hands-off approach. And at the same time, nearly half of the education department staff have been laid off under this current administration. How are you going to get all this done without just the manpower backing you?
Well, it's not about the FTE. I talk about this a lot, and I get that question a lot, Dani, where it's not necessarily about the FTE. It's about the right FTE. You're right. We have reduced the footprint of the Federal Department of Education by almost half in the last 15 or 16 months, which is remarkable. Yet, what have we been able to do? We launched the FAFSA, the form that students and families use to apply for federal student aid. We launched that faster than any other administration in history. We have higher FAFSA rates than any other administration. We have stopped over $1 billion in fraud from walking out the door, thanks to the vice president and the task force for eliminating fraud. We are working very hard for the American people, and we are doing that, as you said, with less than 50% of the headcount that we had a year ago. So, as we continue to right-size the federal bureaucracy in higher education, it's all about keeping the right talent and hiring the right talent to be able to do the work of the American people.
Mr. Secretary, thank you so much for joining us. Really appreciate your time. U.S. Undersecretary of Education, Nicholas Kent. Now, coming up, the rules of finance are changing, and Bloomberg Money debuts tomorrow. Tom Keene and Scarlet Fu, my neighbor, I can't believe I tripped over her name, literally lived next door to her, join us ahead of the launch. This is Bloomberg Open Interest.
Forces of AI, right? What are they unleashing right now? They're unleashing an incredible Capex boom. And to this audience and to the topic of the show, an incredible wealth effect, right? So when you see that, that is leading to a higher degree of economic growth than anybody expected from those two facets, right? You've got an incredible surge in investment spend coming out of this AI demand for investment, and a wealth effect that's powering consumption.
That was Jeffrey Rosenberg of BlackRock speaking with Tom Keene and Scarlet Fu at an exclusive event for Bloomberg.com subscribers here in New York City. The conversation coming ahead of the launch of Bloomberg Money tomorrow, our new weekly show airing every Friday at 12 noon. And I'm pleased to say that Tom and Scarlet join us now on set in honor of your launch. I didn't prepare at all for this.
That's okay. I just want to point out that our height differential is much more extreme than what that promo indicated.
Scarlett's grown a few feet recently, and now they're in even height.
So what are we to expect, Tom?
What we're going to do is bring the industry in a much more adult academic dialogue of money to personal finance. It's not going to be the basics that everybody knows, everybody's memorized, but it's going to be conversations with the best we can find on Wall Street about all these challenges, particularly within retirement and wealth management.
And what we also want to do is also get their input on how they're managing their money. Jeff Rosenberg is a bond guy, so he's risk averse by nature, but how does he manage his money? How does he look at investment overall? And, just to give away some of his secrets, he's an active manager, so he seeks out active strategies. Obviously, he's diversifying. And, what does he consider as a safe haven from a pro's point of view?
It does feel, though, that the ways of making money, or at least the perceived ways, are completely different now. You can bet on anything and everything. Prediction markets are huge.
Don't get him started on that.
I mean, I'm sure that's going to be a topic, though, right?
It's the lead topic with Liz Ann Saunders. We'll have her tomorrow. She's on absolute fire on this. Blistering essay, threw it out on LinkedIn, I think yesterday or the day before, and it will be the lead conversation we will have with Ms. Saunders.
Well, that's one generation. The other generation, the older generation, perhaps, is looking at things like private assets. And Dani, you cover this all the time, right? There's fear in private credit with the Blackstone now limiting redemptions from one of its funds, and there's definitely fear percolating in private equity as well, with partners gating an evergreen fund. So do people go in there now and perhaps see it as fear peaking and maybe deploying some cash? I don't know.
Am I going to figure out, and this is one of the number one most asked questions that I get, what is a mega backdoor Roth IRA?
Mega backdoor Roth IRA. Well, I mean, I know what a Roth IRA is, but the mega backdoor, I mean, do companies offer that? That's the big question.
This is one of the things that people are asking me, like,
Your
how
wife
do you
actually
get
asked me
around
this question.
certain income limits? And I have asked you this question before. I think my wife actually has emailed you questions on this because you typically know stuff like this.
Well, she said I know how to navigate the Bloomberg, and I probably know this better than you do.
But this is one of the key issues here. The Roth IRA is so in right now, and I would suggest there's some abuse to it in terms of where and when, or if not, you do a Roth IRA. But some of the nuances of the industry I'm less focused on. I'm more focused on the fact X% of America can't retire. I mean, these bigger, broader themes are important. But when I look, Scarlet, and if you're on set with Matt Millar, you have to look at crypto. You have to look at Bitcoin down to 63,000.
We can, but Matt, you were an early adopter of Bitcoin because you actually went around and tried to use it, right? You tried to deploy it. This was back in the 2010s?
I wish I had stuck with it because I bought my first Bitcoin for $600. Bought a couple of them, but I didn't buy enough when it dropped after that. But I imagine that your viewers are going to be those who can put money into a mega backdoor Roth IRAs, right? Imagine that your viewers are going to want to know how to deal with the money that they're making on Wall Street. We minted another 2 million millionaires last year as a result of this AI boom.
It's not just putting the money in those Roth IRAs or the mega backdoor ones. It's about when you can take them out as well and where you want to be when you take them out, where you want to be in your life, what state you want to be, what country you want to be, because the tax implications are huge.
We got lucky on this. This has been in development for a long time. And I really didn't want to do it. And then Scarlet Fu came out and I said, okay, I can do that. and so, they said, Scarlet, I said, let's do this. And it's just sort of, the stars have crossed to this absolutely wacko moment of equities, bonds, currencies, commodities, AI, SpaceX. The show a week from now will have a huge SpaceX tinge. We're not able to announce those guests right now, but we're making it up as we go, week by week. And as you know, doing the grind, Dani, I mean, it's just as simple as day to day. You have no idea what you're doing the next day.
And so, but you can talk about the guests you'll have for this week's show. Yes. So Liz Ann Saunders, you mentioned. Is Jeff coming back as well?
No.
Well, we're going to show.
It's too much Jeff.
No, we're actually going to disclose what book Jeff is reading because, again, as a bond guy, he's really interested in learning about other parts of the industry that he doesn't know as much about. Right. We're also going to talk with Gabriela Santos of JP Morgan Asset Management.
I want to be sure that we involve all of the industry in this with the huge challenges they have. But really, one of the problems I have, Dani, is we have to look at tangible assets, which we were deep in a meeting. I think we had our 3 interns with us, and Ted Fine and Rachel Wurspan, and everybody supporting us. And they just said, you have to have Matt Millar on to talk cars.
I'm looking forward to it.
It's part of personal finance.
It's an important asset and should be in everyone's portfolio. Tom Keene and Scarlet Fu kicking off Bloomberg Money tomorrow at 12 noon New York time.